Partnered by Times Influence.
I'm Isha Bhalla, and I'd like to welcome each and every one of you to IIFL Presents the Economic Times Housing Finance Summit, co-powered by LIC, HFL and HDFC, and the event has been brought to you by ET Edge. I'm sure each one of you will believe when I say that owning a house is everybody's dream. And here we meet to convert this dream into a reality. Housing finance is a crucial driver to the world's second largest populated country, and this is what brings us to today. Ladies and gentlemen, I'd now like to introduce to you Mr. R. Venkatraman, Managing Director, IIFL Holdings. Please put your hands together as he joins us on stage to address this August gathering. Sir?
Welcome to the second ET Housing Finance Summit. As the subject says, remonetization and RERA has a very strong impact on the overall demand for housing as well as housing finance in the country. RERA is still in initial stages, and going ahead it will have a very deep impact not only on the demand side but also on the funding side, which involves most of the lenders including us. If we talk about the supply side in this housing industry, the implementation of RERA will bring in its wake increased transparency and trust amongst the consumers, and that will help the sector to grow in the long term. If we think of affordable housing and government's focus on initiatives such as Housing for All by 2022, there's a lot happening, including tax incentives for the affordable housing, as well as inclusion of affordable housings as a part of the infrastructure sector. On looking at the demand side, demand for affordable housing has been always there. Launch of Pradhan Mantri Awas Yojana for lower income groups, economically weaker groups, as well as middle income groups will be the hook for the first time buyers, and launch of PMAY Rural will also reinforce government's aim to ensure that everybody gets a house in the country. The other announcements like public-private partnerships is also a positive sign that the government wishes to promote private investments in the sector. And that is a fallout of its plan to have Housing for All by 2022. In India, demand for housing has always been there and will continue to remain. I'm glad that this government is putting focus on housing, and the Act, RERA, which play a very important role in making sure the sector gets formalized and will help the sector grow in the long term. Thank you.
RERA has brought forth transparency and regulated growth into the realty sector, and this is what brings us to our next segment. Yes, the leaders in this session throw light on what one can expect. I'd now like to invite on stage our panel chair. Please put your hands together as I welcome Mr. Hemant Jhadaria, Partner, Strategy and Digital Financial Services, PwC.
Starting with Shriram as a housing finance regulator, there's a lot of recent developments that have happened, bringing transparency, accountability into the overall housing sector, and also a lot of push factors towards this goal of Housing for All by 2022. Can you share some quick insights on what are those developments and what are some of the numbers that as a regulator you are looking at?
The 40% of the new units have definitely gone into the affordable housing segment and below 10 lakhs. That I think is a great positive to the Housing for All. We had issued something about 12 licenses last year and 11 previous year, and this year already is it at 6. What we have done is we have just made the whole process very easy and transparent. The moment you give us all the papers, it would get uploaded on my website, and then the tracking starts. And as soon as I receive some of the, based on a matrix, we decide which other regulators we need to go to, which would happen. From the housing side, the RERA, I always used to say, look at it in the long run, it would help you more than anybody else. And it is already becoming true. The financiers become more comfortable, the customers become more comfortable, and over a period of time, the entire system adjusted to the transparency.
Let's move on to the impact of RERA. And Abhishek, what's your thought on how the entire developer industry is changing with this whole RERA, some of the other regulations around REACH and etc.?
Introduction of a variety of different new laws / reforms by the government are all making the industry move towards being a lot more organized, transparent, and therefore one which has a lower level of risk associated with it. The level of risk is lowered for buyers, it's lowered for investors, and it's also lowered for entrepreneurs. The introduction of RERA is one very significant step where the level of transparency, the level of awareness of what is going on in the marketplace is gone up tremendously. RERA is something which is very, very healthy for the industry in the medium term and will really move towards making India a really mature real estate market. REITs, which I think are imminent, is another such action by the government which is going to make the market on par with international markets, will bring in more institutional capital, will allow even people who can't afford to buy an office or space in a mall and generate rental income to participate in yields and generate the benefit of rental income and long-term appreciation in values. So both of these measures are going to enhance the base of people who are looking at the industry and overall improve the credibility of the industry.
There's also a bit of an uptick in the delinquency of real estate as we look at the last 2 quarter numbers. We see a lot of players coming into this. Do we see any players taking more risk, more than expected in terms of trying to compete in the affordable housing finance market in your view?
I believe that most of them, if not all, are primarily due to the credit appraisal, maybe not at the right level of the housing finance companies. The portion which is due to maybe developer default, wrong planning or something going ahead, whether it is for affordable or others. Now with the coming of RERA, I believe there should be a fall in the delinquencies also. The exposures, the transparency is more of the exposure is to be made regarding the project in totality. The timelines for completion of the project are there. So I believe that with the coming times, because of RERA, especially because of RERA, the delinquency level should come down, and whatever will be left, maybe because of the credit appraisal shortfall of the companies.
So Harshal, what's your thought on the whole LAP portfolio that housing finance has embraced over the last few years? And again, we all know SME as a segment is underpenetrated, and it has. I think LAP has gone a long way in terms of being able to finance that segment. But what are your views now? A number of housing finance companies are extending into LAP, and how effective is that to really improve penetration within the SME segment?
See, there has been a lot of talk around LAP, predominantly on the basis of the fact that the valuations and the BT top-up which keeps on happening as far as the LAP is concerned. Our experience has been pretty different, and post demonetization and with GST, you are seeing a complete different wave with respect to LAP. There is a silent transformation which is actually happening across the country. I was in Ahmedabad just 2 days back on the road, and when you meet with traders, while a lot of things you see on the media, but what you also see on the ground is the fact that how slowly they are transforming their businesses into a more formal channel, right? And to move that business into more formal channel, what they need is a formal working capital. And where do you get this formal capital? You get it only from organized, channels, banking and the housing finance companies or the NBFCs. And this is what you are seeing predominantly happening in the middle segment, or which you call your trader community or your merchants, or your SMEs who are transitioning themselves after post demonetization or with GST. Because they have an established business and they are moving that established business from so-called cash economy to a more formal economy, and that's where you see an uptick in the LAP business.
You see the impact of demonetization. Over the year, in the beginning of the year, we were hearing a lot about the the cash component in the housing sector, and that kind of like going away. Do you see that coming back? Do you see that impact coming back to where it was a year back?
I think what has happened post demonetization is going to stay put for good, which means that the valuations would be much more formal. They'll be absolutely transparent for all of us to assess, which also in one side earlier would be viewed that okay, there's a lot of cushion there, that when you lend to somebody, maybe now we can say on the other side is that the cushion might not be there in terms of the cash component not being there now. But I see it's again good for the industry in the sense that you could also be making wrong judgments in the previous regime as well, where you would assess the market value basis some judgmental things which may not exist. So we are not seeing that reoccurrence of cash component really coming back into the market. That's what we feel. But we surely see that with what's happening now, it would only encourage the retail housing finance players for a new home buyers to be there. So overall, I don't see the cash coming back.
So Keki, we talked about a number of things that the government is doing. Are there other things that that could be done from a policy perspective to really give a push to the entire housing finance?
I would say that the government has done a tremendous lot. Last year's budget, 2017 budget, is really a housing budget, affordable housing budget. And so many incentives have been provided by the government. I think the benefit given to the sector emanates from the fiscal benefits. Interest is tax deductible up to 200,000 rupees. Principal repayment of a loan is considered as a saving. Along with other avenues of saving, is entitled to a deduction of up to 150,000 rupees a year. And then you have the subsidy scheme, the CLSS scheme, which is a huge boom to a lower income or a middle income type consumer. So the government has more than done its bit. I think the only thing I would say is that today for the smaller housing finance companies, one of the biggest challenges they possibly face is availability of funds. And availability of funds is a challenge because with their rating, they may not be able to get funds at rates which are affordable other than through refinance from the National Housing Bank. And because they are not able to raise money at fine rates, they are necessarily forced to lend money at a higher rate, which then makes them do slightly riskier lending, LAP loans and things like that. I don't think the government has any role to play in that, but if availability of funding could be made a little easier for these entities, then I think it would go a long way.
Thanks everyone. I think it's been a fairly engaging discussion. Thank you.
Affordable housing has been a word which has been in existence for so many years, but I think it's for the first time ever that this industry, the affordable housing industry, has got a fillip all around, which was just changing the entire ecosystem.
RERA is a very welcome move for the sector, and I think with greater amount of transparency, the trust that a buyer has on any project will lead to growth in the sector.
Today it's absolutely transparent. I need to come to you for approval. I need to commit a timeline. I need to update my stages of construction. I need to abide by all the rules. I think this is the best thing that has happened to the consumer from a home buying consumer from a regulatory point of view.
We're now all set to begin our next panel discussion, which is affordable housing, structural driver of housing finance growth in competitive market. And I'd like to present to you our panel chair. Please put your hands together as I welcome on stage Mr. Prakash Agarwal, Director and Head Financial Institutions India Ratings and Research.
I'll ask my first question to Venkatesh. In terms of what are the structural features that you think are driving the low-cost affordable housing demand in India?
With respect to structural drivers, the major reason to drive growth today is urbanization. So you see, maybe another 4-5 years down the line, you'll have 35% of our population living in urban India. The other thing would be, overall basis, with respect to the mortgage market to the GDP, India should be the least. Among all other developing countries, India should be the least. So there is some more headroom as a product or as a business to grow. And of course, the government measures. We have seen in the last 2 years, the rollout of CLSS schemes, where the small-time borrowers are getting hugely benefited. The NHB refinances, where there's a strong motivation for housing finance companies to look upon the NHB refinances. And of course, the grant of new licenses, which is going to be, I presume there's going to be some more licenses to be given. So being 91 licenses today, I think most of the markets have got availability of credit for affordable housing borrowers. And finally, I would say the demographic of the borrower today, the less than 35 population is 65%. And I think India still continues to have that kind of an taboo where a person gets settled only when he buys house. So all this put together, I think the growth in the affordable front has to be sustainable for some more time, and it's very attractive even as a business model.
My second question is to Mr. Abhijit. What do you think, what is the competitive advantage of, HFCs or NBFCs in this affordable housing segment? So when we are competing, supply side from financing from banks or HFCs, what do you think, what is the core strength of HFCs in this segment?
The definition of affordable varies according to, where we are talking to whom. Now, Xrbia as a developer, we have been doing affordable housing, which is always, less than 10 lakhs. So the price point starts from 5.65 lakhs and goes up to around 12 or 13 lakhs. Now, if we talk of that segment of pricing, we have seen that majority of our buyers are from the informal sector, which would mean that they don't have income documents, and if they don't have income documents, they don't become legible for a mortgage loan as per the standard mortgage norms. But 75% of our portfolio are getting funded through the informal appraisal system, which would mean that the HFC which is funding does not ask for a formal income document. The informal appraisal system has to become much more available and much more known and much more easy to get than what it is currently. If this product becomes much more available, I think the HFCs can have a better growth than the banks, because maybe the banks might not be able to do it as soon as the HFCs can.
I think, Manish, you want to speak on alternative credit methodologies for this segment?
If you look at the catering to the demand side, all of us who have run housing finance companies and have seen this segment for some time will realize that at some point of time in our growth journey, you come up against a crossroad. And that crossroad is, what do you kind of weigh in on? Do you weigh in on growth, or do you weigh in on portfolio quality? There are very few companies in the informal sector housing space which have been able to ride both horses successfully. So it is always about, wanting to trade in a little bit of one in favor of the other. And therefore, if we talk about this huge demand that needs to be addressed, this large number of houses in the informal space that are getting constructed, you have to have the capability to be able to underwrite the prospective borrowers for these homes or for these loans in a reasonably confident manner. And that's where I think some structural changes are required. It all has to start with getting credit reports on borrowers which are far more enriched than what they currently are. And all of that information is going to form a rich pool which is going to tell you more beyond how that person is paying back the loan. So there is a whole lot of possibility in trying to enrich the quality of credit and the quality of credit assessment that one does. So I think huge potential of kind of getting in technology there, not to mention that it kind of brings down your operational costs. It helps you penetrate markets which are currently unpenetrated. And because most of the housing finance companies are nimble and they don't rely on a central or a core banking system, it allows you to make regional tweaks to the subject, because anybody who's present in this room will vouch for the fact that credit assessment in a small village in Tamil Nadu cannot be the same as the credit assessment for, let us say, a hamlet in Punjab. There are different demographics, there are different trends, there are different things that you have to consider. So I think, yes, huge potential.
You want to add to this?
There is a huge market as far as informal lending is concerned. We all get after information which is available in the bureaus, try to do upsell, cross-sell, but we don't tend to focus on the informal sector. There is a fair amount of unbanked population in this country. So therefore, it is time to work with the fintech companies to look at some kind of propensity models. So informal lending is a function of how strong your underwriting processes are. There are structural variations in the way different parts of the countries were to operate. The legal system, the availability of information is all very different. You need to adopt a very conservative debt burden ratio, and you need to be with the customer or with the applicant at any given point in time to understand what exactly is his cash flows, both the inflows and the outflows. So informal credit, huge potential for growth. Two, we need to be very nimble as far as our costs are concerned, and therefore the leverage on technology. Thirdly, in terms of, if you get these two things right, don't think the credit quality is going to be significantly out of place in this particular segment. Our experience is the other way around. In fact, the credit quality is quite, it's very good in the less than 25 lakh space. It is what we experience.
While the lending is one side of the business, the other side, which is equally important, comes in terms of funding. While the large HFCs, it is easier for them to tap both the capital market as well as the banks. The newer HFCs which are stepping in, it's increasingly important for them to get right funding. I mean, given that the tenure of these assets could be pretty long, it's good to understand, what are the evolving methodologies, evolving sources of funding for this segment, and what is the importance of long-term funding, given that the tenure of assets, even on a behavioral basis, could be 5 to 7 years. Madhu, if you want to take this question.
Yes, sure. So money is a raw material, right? For this business especially, it's the only raw material other than people. Currently, the market is very liquid. So, I mean, this is not a time when anybody can complain about the lack of money. The whole economy is flushed with funds. So, I think the availability of money is there, but the challenge is in really raising money at the right price for the right tenor. Because by definition, our business is in lending 15 to 20-year money. And no bank actually can commit a more than 10 years credit line to you. So, you end up running asset liability mismatches on your books, which you cannot really price. I truly believe today that, the biggest risk in my business is on the left side of the balance sheet, on the liability side of the balance sheet, rather than the asset side. Because the asset side is fairly predictable. We know that there will be a 1% or 1.5% assets that don't perform. But on the liability side, things can change pretty dramatically when the interest rates change and stuff like that. So there is a challenge in terms of getting the right tenor and the right price. And unfortunately, the Indian debt markets have not become that deep in terms of tenor and in terms of, let's say, flexibility in products. So the only thing that banks can give you are term loans, right? And if your company is large enough, then maybe you can go directly into the market and raise NCD money, but there also you can raise maybe 7-year money. So the real challenges for the regulators and for the market as a whole is to try and figure out how to get people with longer term funding sources available, such as pension funds or insurance companies, to directly get into the mortgage finance business, either through HFCs or directly even, because they're the only people who have long-term money. And I think really what the mortgage market needs is long-term money.
Thank you so very much for our panel. It was a very good session. Thank you so very much. Yeah.
I can see that the aspect of this act becoming a successful implementation is based on creating awareness, and that is what Economic Times is doing. So I am grateful to Economic Times for that.
The time is right. People in India need to buy a house. There is a structural demand for housing in India. And I think the focus that the Economic Times is putting on getting people together to bring in this summit is, I think, very commendable.
The government has launched the Housing for All 2022. It definitely is a very positive push in the affordable housing segment, not just in the housing finance, but I would also say that it also leads to a push in another 200 plus industries which are associated with real estate, and this can also aid in the higher growth of the economy.
I think it's a great initiative in the sense that they have kind of brought all segment stakeholders in this, in one place, and the kind of discussions which are happening are really erudite. I think this provides real good food for thought for both for regulators, financiers, as well as developers for going forward.
Partnered by Times Influence.